Okay, hello everybody. Let's start the gold analysis. And let's start with the weekly time frame. And I delete all my levels and we draw the new levels again. So this is the start of the week. What we see. This one is the rejection block. And this one is mitigated. But even if this is mitigated, it doesn't mean that we cannot draw this level. We will still draw this level because we are not going to short into this level, but at least just to keep an eye that maybe this week also we get rejected. So we don't know. But of course, this is not for the entry purpose, but just to check that where is the weekly rejection block. Okay. And then what we have, this one. This is the weekly key level. So we call this one weekly key level. Okay. And I don't see any level other than these two levels on the weekly time frame. And then we go on the daily time frame. So on the daily time frame, what we have? The daily time frame, this is the bullish and then bearish. This one is the daily key level, right? This one. And we have anything other than this, we have this one. So we can call this one as our daily fair value gap, right? This one is the daily fair value gap. And other than this, I don't see any when the day was started. So this is the previous day and we don't have anything. Then we go on the H4 time frame to see what's going on here. On the H4 time frame, first we check the ranges. So what ranges we have? We are at the H4 change of character. This is bearish change of character. And now we are going higher into the decisional order block. And other than this, I don't see anything on the H4 time frame. And as for the levels, what we see here, where the day started, this one, the day started from here. So when the day started, so you see that this is the first candle. So before day started, we have what? We have the week, I mean H4 rejection block. Okay. And then we have this one. What is this? This one is also H4 rejection block. Can you see this one? So H4 rejection block. So we have only two levels on H4 time frame. Okay. And H1 time frame, what we have? This is where the day started. And this is all the Asian session. So this is the H4. And then these are another H4. So actually two H4 candles. This one and this one. Okay. And then what we have during this time period, this was the rejection block into this area. When this is where the London was going to start, this one. So we have this one as an H1 rejection block. Okay, so if we are looking for any entry, we are looking any entry above this level on the sell side. Why? Because we are already going lower, right? And we don't have any kind of order block or any kind of POI into this area. Okay, we have this one also. We have another rejection block, or we have another rejection block here. So let's start from here basically. So this is the first hour. We have anything on the left? Nothing. This is the second hour. We have anything? Nothing. But first hour and second hour created one rejection block, right? First hour and second hour created one rejection block. So this is where we are looking for long. Until where? Until this is the three candle formation, until here. But of course we will not go exactly to this level. Why? Because we have the weekly rejection block in the middle of this price and this one here somewhere. Okay, so we will not go our target above this level. Just we will try to close our long position before this level actually. Okay, and then what we have, you have the sell to buy, and then you are going higher, and then you have nothing except you almost reach to your target, right? And then you have another rejection block here. What you have, buy to sell. Look here, this one, right? So when your objective is met, now you can target this one. And on the lower time frame, if you can find the entry into this area. So let's say we check 1 p.m. We go on the 1 minute time frame, and so what we have at 1 p.m. This is where it started. The candle was started here, and candle started right at the rejection block. So what we have, we have the range from there to here, and you can sell into this level. And then what will happen? The stop loss will hit here, this one. So it took the high and it took your stop loss, and then what happened? It reached to your three candle formation target. It reached here. So you need to mark your draw on liquidity. So this is your draw on liquidity. So the market reached to your draw on liquidity, but unfortunately it took your stop. Okay, and then this is the level which I was looking at. What we have, the H4 rejection block. But if you notice that this H4 rejection block is exactly at the H1 order block. H1 order block. So this is where I was looking for the long entry today. So if you see on the 1 minute time frame, this is the lowest point, right? Because you don't know which one will be the lowest point until the market is going lower and lower. But at some point you will get your confirmation entry. So this is your low, high, and you got your confirmation entry here. But I didn't enter here. Why? Because I was still looking for, I don't, I will not say looking for, I was still expecting that maybe can the price can go further down. But I can see here it was the confirmation entry, because this is the QM and price took the QM. So if we want to enter here, this is the perfect, I mean here. So this could be the perfect price to take, but I didn't enter here. I waited, and then the price took another break of structure, and then it came down. This time the market, this is the most important point, listen carefully. This time the market doesn't need to take the liquidity, because the market has already taken the liquidity in the form of QM. So when the liquidity is taken out, then most likely the next one could be just the order flow. Okay, order flow, just order flow mitigation. In this case, you don't need to wait for the price to take the liquidity. The liquidity is already taken out. Now it may be the order flow is going to start. So that's why I entered here and target what? The daily key level. So this was almost the 7 hour quick trade. And if someone missed this trade, then have another trade. Look here. What is this? This one is another QM. So if you enter into this area, you can still target the daily key level. Okay, so this was the second entry today, and then the third entry is where, when the price reached at the daily key level, it on the 3 minute time frame it took the QM, and we have the here we have the decisional order block here, and this is where I entered again at the 50%. And if someone was asking me why I didn't put my stop loss here, or even why I entered here, why not entered into this area, and why not put my stop loss here, yeah, I explain why. Look here, I use the moving averages as well. So you see that I entered exactly at the 200 basically. So I don't use the moving averages as a single alone for the entry. Of course, I just take the entry that where the price can maximum reach to. So this was my entry price exactly at the 200 moving average. And then below the 50, I want my stop loss somewhere here. So even if the price wanna go down, it can go down something like this, and then it will be, and then this 50 moving average will be something like this. So I still have the room. So that's why I put my stop loss here, and this is where I entered. Why I not entered there? Because I don't see anything. Of course, I can enter based on the order block. This is 100% correct entry to enter there. But I just refined a little bit and entered exactly at the 200 moving average. And these are my settings, by the way. 8, 21. These are the EMAs, and then 50 and 200. These are the SMAs. Okay, so I entered exactly here, so that's why my stop loss was, I have, if I put here, then I have to put my stop loss a little bit lower. Why? Because I want to give a little bit more room to the 50 moving average. So that's why I entered at exact point. So this is kind of sniper entry exactly here. But of course the price came into a little bit, it gave me some heat, but it is at the moving averages, so I'm completely fine. And then H4 rejection block. This is the second trade. This is also another another second trade, another 6 hour. So basically it's almost 10 plus hour today. And which was a losing trade? This one, that was -1 hour. And now what we have? And now you understand that this actually come from where? You don't know, right? I explain where this come from and why I entered exactly into this area. This is H1 order block. Look here. This is a down candle. So sell to buy. So this exactly at the order block. So H1 order block. So now you can see that this price came down actually to mitigate the order block. So actually I could still wait to enter exactly at this area, but I was just afraid that the price can just go up from here, from this 200 moving average, from here. So that's why I entered there. Otherwise, if you are not using the moving averages, then this was even more perfect entry into here, and then this one, and this will be 8.5 hours, something like this, because you got even better entry on H1 order block. Okay, so these are the three entries so far at the moment. And one guy, he was asking me that will I short at the H4 rejection block? I will not short. Why? Because if you see, all time frames are mostly up. Look here, we are mostly going up. H4 time frame, look here, from here we are continuously going up. Of course, there are the sell opportunities, but I am not interested to sell into these areas rather than buy into these areas to go, or maybe we make another high, something here. If I can find another order block, for example, look here, we have another order block here. So if the price on this candle just like this comes here, this could be another entry today, something like this. On the lower time frame, on the M3 or M1 time frame, you need to find the range, not directly enter. Of course, you see that we found the ranges. There is no entry without any range. This could be. And remember that if you enter here, you check your stop loss should be below this rejection block. This will be the H1 rejection block. So even if you enter there on the M3 time frame, you find the range, you enter there, but your stop loss will be a little bit lower. Who knows, the price comes here, test this one, and then go higher. Also possible, right? So that's why you need to keep an eye into this level as well, not only the order block, but every candle which have the order block usually have three types of POIs. Look carefully. For example, this candle is the order block, right? So there are three types of order blocks. I mean the POIs. Number one, what you have? H1 imbalance close price action. Okay, the price simply can come here and maybe just bounce off from this level. So that's why the ranges are very important. You don't know that which level the market will come. So if there is no QM and the market is still at the upper quadrant, in this case you will not look into this level. But of course this is the POI number 1. So where is the POI number 2? This one. And what is this? This is your OB. And then what is the POI number 3? This is your rejection block. So you have 3 POIs. We never know that the market will come to which one. So that's why when you have the range, you will check that how far the price can go. Who knows that the range here is the extreme order block. So this will be the safest one. So that's why you need to find the range into this area to find that where is your extreme order block, where is your decisional order block, and which makes more sense to enter into the trade. So otherwise it's so confusing if you will simply mark the key levels and you say okay, I'm going to enter. It's not going to happen like this way. You have to find the range, and range will be on the 3 minute or on the 1 minute time frame to check. Okay, but in this case the market never came down like this. Otherwise this, like this one, have a very beautiful entry here. So now what we have, let's see quickly the current price action. On the H1 time frame we don't have anything, except we have these 3 POIs. H4 time frame, what we have, H4 time frame, we have the rejection block. So this is very important. We remove the daily key level, it's already mitigated. Weekly rejection block, remove this one. And H4, now already price is above, remove this one. Or better, you don't remove. Here one thing can happen. Look here, listen carefully. This could turn into the order pairing. And what is the order pairing? Maybe, okay, let me turn on my drawings 1 second. Okay, so keep an eye into this level today. This could turn into the order pairing. And what is the order pairing? You will go one time frame lower. On the one time frame lower, if the price closed above this level and next candle takes the high but closed lower, what you can't see, uh, you can't see the screen or what? Oh, okay. I think that one is not working here. Okay, let me do one thing. Okay, I just draw here. Okay, so keep an eye into this level. This level can turn into what? The order pairing. So what is the order pairing? The order pairing is, listen carefully, this is the most important point. The price can close above into this level. Okay, and then the next candle maybe break the high, something like this, and close lower. And this will be on which time frame? If this is the order pairing on H4 time frame, then this thing will happen on M15 time frame. If this happens, and if this happens, I will show you maybe in the chat that if this happened, then I will explain that this is the order pairing. What is the order pairing? Above the level on the 15-minute time frame, the price will close higher, and then this high the next candle will take but reject and close lower. Close lower, it could close, maybe it can close here also, something like this, or it can close here also. If it closes here, let's say, then also no problem. Then next candle you are looking for where you are looking for the next candle close something here. Here. So what does it mean? You're already back into the range, and this will be your order pairing on the lower time frame. And then we are looking for this target, and this will be what? Our draw on liquidity. Okay, if this happens, let me check. I think on one time frame today I saw this. I have to just search it, if I can search quickly. I saw this today, by the way. uh, at one time frame. So I think this one, let me check. The price H1 versus M M15. No, it's not here. It's not this one. I think this one. M15 versus M3. Yeah, this one exactly. Look here. So M15 versus M3 on this time frame. Look, this is the first candle which closed above this high. Okay, and the next candle will take the previous high. Can you see? This high is also taken up and then closed back into the range. It can close here and maybe the next candle close here. It's okay. It doesn't mean that it must need to close only this candle back. But this, the first candle, whatever the candle, this is not the first candle, this is not the first candle, this is the first candle which closed above the level. And then you need to wait. The next candle takes the high and then close below this. And then on the higher time frame, 3-minute versus 15-minute. On the higher time frame, it's what? It's just, you see that the price closed above and then rejected. So this turned into what? The order pairing. So if you get the order pairing, then this is your target. The next 3-candle formation, draw on liquidity. So now you go on the 3-minute time frame and you need to find the entry into this area. Maybe on the 1-minute time frame you check if you can find the entry. But I'm not explaining the entry here. And by the way, I didn't find any kind of confirmation entry. But if without confirmation entry you wanna buy, look here, what is this? This one is the order block, right? And then the first time the price tested the order block, if you enter here, of course your stop loss is above where? Above the manipulation or above the order pairing, and then you can target the draw on liquidity this one. Yeah, this is your draw on liquidity. You can enter here. Okay, if why I don't think so you will find the confirmation entry here. Why? Because you don't have too much room. You have only this much room, and your draw on liquidity will reach. So that's why maybe you can just you can check that. Okay, what you have the market structure shift, and the first order block you can sell. Why? Because this is the exceptional case. You will not, this is not the confirmation entry model. Confirmation entry model is only you have one and other. You have the range, and then you will enter maybe at the DOB or maybe at the EOB, and then looking for the external range liquidity. This is the confirmation model, and this you will apply everywhere, only confirmation entry model. But if on the 1 minute time frame you get the 15-minute order pairing on the 3 minute time frame, and you see that you don't have too much room for this kind of price action. Of course, if this price kind of price action, it takes some room, and if it will do something like this, it will already reach to your target. So in this case, and only in this case, when you get the order pairing, then you can simply see, okay, I have what, the market structure shift, and then this is the order block. You can enter directly at the order block and above the order pairing. Why? Because now the price is very unlikely to go above into this area. It will be something like this. If this is the level, the price go higher and comes down, the first pullback into this area is a sell into this area. We are not expecting the price to come into this area. Why? Because you have to understand the logic. Why? Because the market has already trapped the buyers here. If the market will go higher, it will give them the opportunity to close the position at the break even. And market, if they want to give them the opportunity to close at break even, why they trapped them? So that's why they trapped the buyers here, and then it just came to mitigate this level. Again, this level came to mitigate. And why need mitigation? This is another concept. That's something why need to mitigate. I'm not explaining in this session, because this session already is too long now. So you can enter exactly into this level now, and then your target is the 15-minute 3 candle formation. So this one, and this is your draw on liquidity. Okay, this is your first target. If you want, maybe you can have the second target here, but I'm completely uh, you can say that I'm completely confident that the price at least to come into this area. So that's why if I will enter short, I will enter short there. Okay, so let me check now currently what we have. Okay, look here, this is where I'm looking for the same pattern if it happens. So let's go on the 15-minute time frame to check. Look here, this is the where the price closed above the level, and then what the price did, the price the price took the high and closed here. It's okay. I said the third candle can maybe go inside. Third candle came, but again closed above. So this seems not the order pairing yet. This is not the order pairing yet, because we are still above the H4 rejection block. If this candle closes below here, then maybe we will be looking for short here to here. This will be on the 3 minute time frame. Maybe this will be the range, or maybe 1 minute time frame here to here, and then we can enter here. We can enter there. And the target 15-minute. We don't need this much big target. Something here. Why? Because this is the rejection block. Can you see the, it's like the resistant turned into support. So this can turn into support. So that's why we are not going below this level if this happens. But of course, we are not entering into this position. Why? Because we don't have the order pairing yet. Price is still above the H4 rejection block. So why we will enter short? Okay. So anybody have any question? No, I don't care buy side to sell side liquidity, sell side to buy side liquidity. I don't care these things. Or maybe I'm doing the same thing, but I don't use these names. I simply use the key levels and find the range. And if the range is agreed with my key level, I will enter. And that key level is basically just for my POIs based on my range. I'm not playing the key levels alone. Okay. So anybody have any other question? By the way, let's see the 15-minute range. What we have. So this is the 15-minute range. We have the bearish range. Why? Because we have the change of character, bearish change of character. The price disrespected the DOB. So today we should be long until where? Until at least here. So now you be careful to go long into this area. Why? Because we have the bearish range and price is at M15 extreme order block. So price is at the extreme order block. If it clears this one, then we will look for the bullish ranges. But now we are not going to see any kind of bullish ranges into this area until we clear this one, or maybe we will go on the sell side. Why? Because we have the change of character on the sell side. Okay, so be careful into this area. You can play here, you can play here, you can play here, you can play here, everywhere, but try not to play into these zones long. Of course, you should, if you are looking for short, you can look for short into this zone, but don't try to play long here. Why? Because if you think that okay, the price gave the pullback, let's buy, remember that you are at the decisional order block. If you are buying, the price can make another breakout structure. So if even if you buy here, the price go up and it gives you 5R, it's not the high probability trade. You always need to plan your high probability trades, not something works one time and doesn't work next time. You are not going to do this thing. So you will be never long into this area or this area, even if it works. It's you will never plan. Why? Because this area and this area is the most lowest probability trades on the long side if you have the bearish range and you are buying at the DOB or EOB. You can plan sell but of course on the confirmation entry model. Okay, so on the 15-minute time frame we have this range, and let's quickly check on the H1 time frame what we have. H1 time frame, we have the QM, and the price even never came to the QM yet, and H1 time frame price has cleared all liquidity actually. Whatever this all liquidity was, the price has cleared all liquidity. So that's why, like I said, be careful to go long into this area now, because all liquidity is cleared now on this one. Whoever sell into this area, wherever, if they didn't close, they are underwater now. So that's why you be careful to go long into this area now. And H1 time frame, so what we have, we don't have the range yet. And other than this, I don't see anything on the H1 time frame. M15 time frame, I already explained, we are at the extreme order block, and this is all. You have to keep an eye into this area now. Okay, Nabil, what is your question? So for the order bearing, we need to take the high and then close. It's order pairing. Order pairing. Okay, so for the order pairing, we need to take the high and then close back into the range. Yes, we need, if this is the level on the M15 time frame, you will go one time frame lower, 3 minute time frame. If this is a H4 time frame, you will go M15 time frame. If this is a H1 time frame, you will go the M5 time frame. Okay, so for example, if this is the level, the price closed lower. This is the point number one. So point number two is next candle takes the low but rejects and closed here or maybe here. If it closed here, okay, good. If it didn't close, maybe the third candle close here, third or fourth candle. When it closed there, then you look for long range. I'm not saying directly enter, long range, and then try to enter close to this level. You understand, close to this level, and then this will be your 5 hour minimum. Okay. Okay. There is an H4 order block over the M15 extreme order block. H4 rejection block over the M15 extreme. Let me see. Okay, this is the H4. Let me delete everything. Okay, so H4 rejection. This rejection block we already talked. We don't have any other except this one, and this one we already drew. On the left, already mitigated, or further left. Okay, until above, we need to check above this one, and then we have here H1. uh, okay, so in this case, okay, so wait, if this is the rejection block, H4 rejection block, let's go on the M15 time frame and look here. You always have two types of POIs. Number one is what? You have the EOB, and number second, if you know, that is called external order block. So you are not going to go long until the price even clear where it is here. until the price clears this one. Okay, so this one is external OB. So you have the range, from here to here. You are at the extreme order block. We are looking for the price to make another break of structure into this zone. If this high disrespects, then we are looking for short into this zone. So this zone is exactly H4 order block. I mean H4 rejection block. So keep an eye into this zone as well. So whenever you draw, you always what I said, external or extreme? Yeah, external order block. This is extreme order block. So you have the extreme order block and you have the external order block. And this external order block also, even if the price clears this high, it doesn't mean that you are going long. You are still looking for short into this zone. Okay. And this one we need to check on the H1 time frame, 15-minute versus the H1 time frame. No, I don't see anything on the H1 time frame except that one is the extreme. Yeah, so you have the 15-minute. If the price clears the extreme, then you wait for the external order block. Okay, and yes, there is the H4 rejection block. Good point. Okay, any other question? Yes, it is recorded. Okay, so for today, I have explained that there where were the potential entries. Check, do your homework, check that why there were the entries if you missed. And for the rest of the day, you need to check the extreme order block on M15 and then the external order block. So this is what your potential point of interest today. Okay, thank you.